Because we fucking trade, baby. Yo. What the fuck is good? How y'all doing? How y'all feeling? How are you all living, man? Welcome back to the stream. Welcome back to the fucking stream. All right, look, I started a little bit early today. You know me, man. Macro schmacro. I don't give a fuck about raids or wars or J-Power. I don't care about any of it. However, I'm forced to care this time. We are forced to care. Raids came back unchanged, but I don't know. What is it? 9 out of 18. I don't know. There's all these projections that there's going to be hikes and da-da-da-da-da-da-da. But Kevin Warsh is speaking right now, and I think the first one matters. And so we're going to watch a side-by-side of Kevin Warsh speaking and the market next to it. And then we're going to work backwards. We'll do roll call. We'll do intro. We'll do all this stuff. But I feel like we have to watch. This is a pretty historic. There's a lot of historics happening right now. And so we're going to watch Warsh. Maybe I'll watch watch Warsh. And we will work backwards. So if you're watching on YouTube, Twitter, you want to chat, twitch.tv/threadguy. SpaceX is back above 196. I'm rich again, so life is good. Life is good. So
I don't know if that's gonna cut it.
Do we want to watch watch Warsh, or do we want to watch Warsh solo? What do you think? What do you think? He's not on yet. We have like a minute or two. Warsh Raw. Do you want to watch watch Warsh, or do you want to watch Warsh Raw? Say it 3 times. Try to say it out loud. Watch Warsh. Watch Warsh. What's good, Veblet? Pit invite. Wouldn't you like a pit invite? Maybe. I'm thinking about maybe giving one out today or in the future. Where's the actual? Here you go.
Scarlett was just talking about when it comes to the equity market, you're seeing S&P in particular take it on the chin. Also, the NASDAQ, as people look forward to hearing from Kevin Warsh in the yield space. 2-year yields really leading the charge here, 4.14%. That has ricocheted higher by about 9 basis points. You could see a similar move on the 10-year yield, but the long end of the yield curve, as Bob Michael mentioned, really likes this. You could see a 2 basis point decline, 4.92%, a promise for stability, a promise to get some sort of control over inflation that has been clearly they predict it going up in the near future. And this, to me, is sort of the interesting thing in their forecast.
We'll slide it.
Kevin Warsh due to come out any minute. There's a lot of question marks about whether the news conference itself will be shorter in the same way that the statement was.
Right now, we have Kevin Warsh going to the podium. Let's take a listen to new Fed Chair Kevin.
Let's watch the official.
Good day. It's an honor, a true honor to be back at the Federal Reserve and to take up this duty at a time of such consequence.
Wow.
I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting
Let's go.
exemplified the very best of the Fed's traditions. Rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance.
There you go.
In this business, they all add up to one thing: getting monetary policy right.
Okay, cool.
Or as near to it as we can do. That is our North Star.
All right, we got to lock in for like 30 minutes.
My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded.
All right, let's go.
As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate.
If you have any good tweets, send them. I'll pull them up.
3.75%.
I like his voice.
In support of
SpaceX likes it too.
Mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize
I want to hear him talk about
that
war.
inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years.
His hair is kind of chopped.
Persistently high prices are a burden for the American people. But the recent past need not be prologue.
Yeah, I got you.
I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability.
This is
At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy.
You launched it by Figma. I have a couple tweets about this.
You might have already noticed something.
We'll get to it.
A difference in today's policy statement.
Let's go.
It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it.
What's good, Greg?
Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture.
Okay.
This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so.
It was useless anyways.
I, however, have refrained from offering any projections of my own, consistent with my long-held views on the SEP, at least as currently structured.
Flood, thanks for the gifted.
In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%.
First chatter, welcome.
The median participant judges that the appropriate federal funds rate to be at 3.8%
Scroll
at
Twitter,
the end
guys.
of this year,
if you have good tweets,
and
send
3.6 at the end of next. Let me turn now to a
Coin
few
joy
words
with the
on
$100
a key
gifted.
initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles.
How is this physiognomy out of 10 so far?
Questions.
Physiognomy out of 10, voice
Examine
and look.
current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications.
A little off on the voice.
This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago.
He does look good.
The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet.
8.
They will assess alternative frameworks for the conduct and operation of monetary policy. The third
PayPal could read
task force,
audiobooks.
the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies including AI.
SpaceX about to hit 200
and
again.
Explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
I don't know. What do we think about the statement? I have no idea. I've never listened to a Fed statement before.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back.
That was it?
This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks.
Market likes it.
And we'll start to get some more information from them, some more framing of how they see things starting in the fall and hopefully most, if not all of them, concluding by year end.
Market really likes him.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter.
Real ones watch FOMC with
from a premise
audio off and watch body language.
2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what
are you
we're
talking
taking on.
about? What did that mean? Fuck, man.
Thank you so much. Colby Smith from the New York
J Powell's
Times.
sweating right now?
You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end.
Jeff Walton
and for the 2%
reply.
inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation.
SpaceX about a big 200 again.
And under what circumstances you would support the Fed taking some action and raising rates?
Sure. So quite a bit there. Let me try to break that into pieces.
Oh boy, Warsh. Lock in,
First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by.
What do the smart macro guys say?
The Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is.
Inflation's a choice.
And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen.
I don't really know what he's saying, but I seem to like it.
That are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven.
It's getting question marked.
If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market. But broadly, I would say Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven.
Damn, market likes it, bro.
It's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
SpaceX 200.
You've said you don't like forward guidance. You dropped it from the statement this time. But with the dot plot, 9 members suggested that they want a rate increase by the end of the year.
Focus, lock in,
and
lock in.
The markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms
how you
of,
guide the markets forward?
What the dot plot's future is?
Come on, Warsh.
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit
You already fucking told you, man.
I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, you know, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons
Trump's
of conviction.
smiling ear to
What I
ear
heard
right now.
was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability, and there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences?
Erasers.
Are you going to continue one after every meeting?
Erasers.
Do you find them useful?
Erasers.
What is the future for the way Kevin Warsh will communicate?
Erasers, come on, erasers.
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome.
Everyone's laughing
Press
and shit.
conferences
What are we
can be
laughing
a very useful way to communicate
What the
with
fuck are we
households,
laughing about?
businesses, and more broadly, through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts.
Stocks at all-time high?
Seek out the best minds.
Okay, so
both
why are you
the best
laughing?
thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Come on, Kevin. Erasers, come on.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy?
Let's talk about Iran.
Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy.
But it's coming down now.
The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly,
I don't know what that
was the
meant.
sense
I don't know what that meant.
from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trim to mean in the past, but again, that's well known to certainly most Fed members. So what is that?
I like
task
how he's
force
just
looking
talking
at,
though.
And what might be
Type of dude to
I
tell you
don't
some
wanna
insider info
prejudge
at a
the
party,
outcome,
you know?
But are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question. So let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods. A national accounts of what the U.S. economy looks like. It looks very little like the U.S. economy in 2026.
Is that who I think it is?
Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time.
Focus, Kevin.
I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than
Feels like he said a whole lot of nothing
about whether something was core or non-core.
No commitments.
Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give just a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable.
I do like
And
this.
they'll be watching data, we'll be watching data. They'll come with better information through market prices to us. We can make more informed decisions.
The ultimate truth machine.
But ultimately, the goal that I said at the outset, deliver on the price stability objective that Congress told us to do and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered the discussion, deepened it, and
Who was
made
the
it
guy?
clear what we needed to do
Who was the
and
guy?
how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Thanks a lot, Claire Jones, Financial Times.
Should we keep going? I'm kind of enjoying
this.
this.
Coming to this blind, reading this very nice short
Guy who
statement.
asked it was
that
so
everyone will
long,
appreciate it in
SpaceX.
the room. One might wonder why you didn't raise rates today, considering what you're saying here about the risks to U.S. inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your
Can you
task
imagine he
forces,
came out and
are
raised
there any
rates?
best practices
First
of the
FOMC.
central banks that you'd consider looking at? Thank you.
I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice.
I like him.
Find
I
the
like
best
him.
minds.
I like him.
Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family
The lights aren't
fight.
too bright. I love them.
Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for,
It's working on
having
me.
done the final roll call, some of the most significant talent we
It's
have
working
in the
on
building,
me.
and across the reserve banks on each of these,
Ooh.
and in some sense seconding them
I liked
to
it
this
more
group for a period of
second ago.
some number of months, so that the leaders
It was only
of
in the
task
files
force
once.
know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it.
Am I mogging?
But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
More of a dialect.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that
Round
be
trip the
your
whole
read
fucking
on what the
long wash.
2-year yield is saying
Focus,
as well?
We were in
focus.
such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given
Wait, what did
markets
she just
is
ask?
a new chapter for the
What did
central
she
bank.
ask?
Some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Hi there, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job, so I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first order consequences to what we're doing. But we do have a really important job there, and it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects. That's our job. That's our commitment.
He hasn't talked about bonds
That's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the president since you're swearing in?
So on the president, I don't have anything for you.
With
respect to the Treasury Secretary,
the egg comment?
Has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly.
I don't even eat eggs.
Pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested
eggs were like
in
up
what's
only
happening
for like
with the
3.
fiscal
Remember when eggs were
authorities. The way I think about
20
it
bucks
is
an egg or
this
whatever?
central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Bessent to this point have helped widen that aperture. So we're aware of things that could affect our day job, even if it isn't.
Shout out to you, Saggy Nuts.
Steve Leisman, CNBC. Mr. Chair, thank you, Mr. Chairman. Thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today.
AI
came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important.
We're green again. We're green again.
Change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment.
What does the Fed chair think of the World Cup?
It's one of the things we have a task force to do.
If you don't mind, a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation, GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy. Not what do we say, but what happens. And the best way I can describe it is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side, I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth,
inflation's a choice,
low prices, and strong employment mutually compatible. And so what you heard from the committee today,
that sounded bullish.
We've got some work to do on the price stability front.
I mean, that sounded unbelievable. I love the way that sounded.
Thank you. Nick Timmeros with Wall Street Journal. Chairman Warsh, you've said repeatedly credibility is earned by delivering. If credibility requires delivering, the move would be to tighten, or at least just threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build-out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank and an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it.
Say supply.
What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence
he's a funny
on the
guy,
demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor
he's a
one
funny
more
guy,
than the other.
huh?
With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just describe it this way. There's a race between supply and demand. Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
Dude, stop with the fucking task force shit, man. Fuck.
Thanks, Mr.
Fuck,
Chairman.
man.
It sounded like on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words, much of this data gathering happens in other
I'm new to it
government
too, bro. I'm
agencies
not
to which we owe a
Fed guy.
tremendous amount of respect,
Thread guy, not a
tremendous
Fed guy.
amount of deference.
We're gonna
But if
we're
in
gonna figure it the
course
fuck
of
out
this
though.
We come up with recommendations, which Fed staff have already begun to develop about things that they could be doing to
Fuck it, ask
help
them about
inform
crypto.
us as policymakers.
Why
We're
not?
not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics, and at least as important, a view of bringing the best practices from the private sector and new analytical tools made possible by AI so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions that we'd say are real contemporaneous data, not data that we call contemporaneous, that's really an echo of history.
Okay. Thanks. The other question I wanted to ask is related to the building renovations.
Are we bored or do we have to keep going?
Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the Inspector General, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the Inspector General, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. I'll be interested in reading the report from my perspective, with a forward-looking glance, is there anything that we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and make sure that we're delivering on the promises that we made? Some more work to do.
Bro
You
thinks
might
it's a
not be
stand-up,
surprised
huh?
in the first few weeks. I've been somewhat preoccupied on other matters, but I
Thanks for the
promise
gifted, brother.
to get to the full breadth of the Fed's tasks in the weeks ahead.
Victoria.
About Trump coin.
Hi, Victoria Guida with Politico. So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us in the SEP, the increase in the expectations for inflation, is that
What's good,
all
babes?
because of the Iran war? What was the discussion around the expectations for inflation being higher and
All
also
because of the
potentially
Iran
growth
war and
being
it's
slower?
over now. All because of oil and it's over.
My read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects,
Oil
no
and it's over.
resolution or conviction.
Say Iran, bro.
We'll be meeting again in 6 weeks. I think we're going to know more then, and I think that my colleagues are very attentive to incoming developments between now and then.
And can I just quick follow-up on the SEP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it.
Did he just
So what do you
say
think is the
if
benefit of
Iran
them
peace
doing
deal,
it
we
even if
cut?
you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. Commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework. There were some changes to the SEP. That's a committee discussion, a robust discussion. I think we'll have it. I believe we're going to come to a better mix of communications to deliver on what we promised, but I wouldn't want to prejudge what those are. But between now and then, I would continue to expect colleagues to submit their SEPs. Some of them, I think, believe that the practice is currently structured is okay, but I heard a lot of interest in real reform, generally about all these topics. You didn't ask it, but I'll answer. It was a pretty gracious couple of days, and it's been a pretty warm few weeks. The institution wants to figure out how we can do better. The institution's going back to first principles, and I'm encouraged that what we've done in the statement, what we're thinking about doing with respect to the SEP, that
I'm gonna get up real quick,
instinct
chat.
towards a
Listen,
new chapter is a real one, and by the end of the year, I hope we can put some points on the board, both in form and in substance of delivering.
Go to Enda for the last question.
Thank you, Mr. Chairman. Andy Curran, Bloomberg News. Could you guide us through, please, some of the principles that guide your own reaction function, and tell us a little bit about the kind of conditions that you think when the Fed should respond?
It's going to be a very unsatisfactory answer to the final question. The Federal Reserve has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through, in part because of inflation in the last 5 years, are in the rearview mirror, and that credibility will have dividends across what we do, and the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better, but we're going to put some points on the board.
Mr. Chairman, we've had strong labour data in recent months. How would you sum up the labour market right now? Do you see it as stable and potentially a source of inflation? Thank you.
Yeah. So so the committee.
It is.
If I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable.
Beer, thanks for the gifted.
There were some
thank you
around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
Wow.
Thank you all very much.
Stand by. 3, 2.
Kind of a nothing burger, huh?
All right, folks.
Market
That
move.
was the first official meeting of Kevin Warsh, who is the brand new Fed chair. Farzad, thank you for being here. Appreciate the super chat. Shout out to Farzad, great friend of the channel. Well, that was quite the meeting. I think there's a lot to discuss and a lot to analyze here. Markets are taking a little bit of a dumpy dump. I wonder how aggressive it's going to be. Most of the high beta names, quite frankly, have held up throughout the day. So would not surprise me to see some green candles coming in like we're seeing right now in the S&P. 746.90 as that one is still down 0.5%. Robinhood, just an absolute champion, trying to go for 110 again. Nebius, 300.
I mean, I kind of got the vibe that he's not a puppet, by the way. Like, he felt pretty strong in his statements. He was cool. He kept it collected. He was, I felt like he was pretty candid, even though he didn't say a whole lot. The task force thing was pretty annoying. I don't know. Look, I'm not a Fed guy. I pay zero attention. I'm pretty pro macro is a waste of everybody's time, but in moments like these, it obviously does matter. Especially when you have a new Fed chair in. But I feel like he's tapped in. I feel like he's really tapped in. Kevin, 40 agents in your pocket, Warsh. I feel like he's really tapped in. No more forward guidance, which I don't know, bullish bears, I have no idea. But I mean, I pay basically no attention. This is what it does feel like though, right? It's like, okay, without forward guidance, we are going to be forced to watch FOMC meetings because the market's going to be more volatile. I feel like we're going to be forced to watch every FOMC. Maybe this will just become a new thing. We watch FOMC now. The yellow line is where he started the meeting. So we officially pumped 0.01% on the SPY. I don't know. I want to read a couple takes on Twitter. And then also if you're watching on YouTube or Twitter and you would like to chat, they're fighting about who's the boss of YouTube gang over here. YouTube gang, rise up. YouTube gang. YouTube gang. Twitch player is trash. What's up, YouTube gang? I'm the YouTube gang boss. They're fighting over there about who's the YouTube gang. Let's take a look. I want to read a couple tweets, and then we have a lot to talk about. I guess the scariest part is 9 out of 18 Fed members think we need a hike for 2026, which is pretty scary if we did get a hike, but we're not there yet. I wish he would have given an answer on inflation being driven by oil in the Iran war. And imagine he said, when the war ends, inflation will come down and maybe we could even cut. That would have been unbelievable. But I feel like he didn't have a great answer for that. What's Poly Market saying for rates for the rest of the year? Let's see. Rates. Here you go. All right, Fed decision in June is over. Fed decision for July, we're saying no change as well. 81%, 15% chance for cuts, or for hikes. And then September 16th, we're saying 64% no change, 23% chance for hike, 12% chance for cuts. So I don't know. I guess we're gonna have to become daily watchers. There's a couple people out whose tweets I want to read real quick. Page out first. So is TBPN watching this or no? No.
The most.
All right. This is also a good point. Market front ran a lot of this hawkishness already. That was sort of the expectation. No real fade out tweets. Zero hedge, who I know people hate, but I like zero hedge. Let's see what he said. Zero hedge, just headlines. What about Kruger? All right, good summary here. Kabisi letter. I guess we're just gonna have to get nice at understanding macro. I don't. Born to trade memes, forced to understand macro. Summary of the Fed Chair Warsh's statement. 1. Shorter Fed policy statements intended to give you the facts. I like this. We can actually read it. Forward guidance and Fed statement not well suited to current policy state. Establishes new independent task force in 5 key areas. It felt like it was 20 areas. Task forces will propose next steps, including changes to the summary of economic projections. The Fed will be maintaining its 2% inflation objective. Fed policy appears to be restricted for housing, but not financial markets. A new era of the Fed is ahead of us. Not a whole lot there, huh? Nothing else. Yeah, I don't know. If you have any good, if anyone has any good takes on, I know enough to know that I'm not going to be able to give great foresight on the future of. All right, here, let's read Togs. So first he said an hour ago. We'll see what Warsh has to say, but I don't think it's as bad as headlines people are making it. Added more risk. And then less unsure on this now. Don't want to overreact, but I think he has much more focus on price stability and inflation than the market was ready for. Didn't particularly take solace and energy down now. ME piece as an easy off-ramp he could have used, but instead reiterated they'll fix it over and over. A lot to digest over the coming weeks and days. What about stocks right now? So SPY's down since he talked a lot. Qs are down. Nasty reversal. This is 1 minute. Let's go off the 1 minute. Let's go daily. Pretty nasty daily there. Bitcoin ugly. Individual names. The mags are pretty ugly. Amazon down 3.5. Google down 2.5. SpaceX down 2. Apple down 2. Meta down 5. Ugh. And then the dollar is ripping, right? DXY, which I have here, is up 1%. That's a crazy chart, huh? We better learn how to trade currencies, ladies and gentlemen. Are we about to learn how to trade currencies? Look at DXY. That's a pretty crazy. What about like the weekly? It's probably cleaner. I mean, I know nothing about any of this, but there's no such thing as a 1, 2, 3, 4, 5 as a 6-tuple top. Never heard of it in my entire life. So, all right, if there's any more good takes come through that are interesting, or let's do one more look real quick. Let's do one more look. Oh, let's see capital flows. I didn't realize how based Warsh was. I wasn't familiar with this game. That's kind of my read as well. Pretty fucking based. All things considered. I felt comfortable with Mr. Warsh speaking on the mic. All right, well, we did it. FOMC, not the markets didn't really move all that much. Doesn't seem to be any crazy headlines that everyone's stirring around on. So we'll come back to it when we come back to it. But we got market close in 45 minutes, and we have a fucking lot to get through until we get there. So let's go backwards. Let's take a second and do something I didn't get to do earlier, and let's rip a little roll call, baby. Rug, what's good? Woo. Foo, what is good? JG, what is good? Sir, what is good? Mac, what is good? Kevin, Viblet, Proof of Work, Ether, Tingle, Crypto DJ, and Crown, what's good? I know Coin Gifted Floods in here as well. Rockefeller, what's good? Sachs, House, Goblin, Strike, DJ, what's good? Big Mo, what's good? Greg, what's good? What's good? What's good? What's good? What's good? What's good? Charlie, what's good? Makeley, what's good? All right, welcome. Smart Doug. If you're watching on YouTube or Twitter and you would like to chat, twitch.tv is in fact the only, Jackson Ray, what's good, is in fact the only place that I will be reading chats. I wish we knew who the one guy who wanted cuts was. That would be electric if we knew who that was. This is Nancy, first chatter. Welcome, 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 welcome. I wish we knew who the one guy is that wanted cuts, because I would have been in there fucking clamming up looking for cuts. But all right, let's talk about the market. First and foremost, topic number one, I would like to cover SpaceX. So traded really weak today. It got as low as got as low as 186. I had a stop down. I don't know what to think of this trade right now. I had a stop for 187.7, which is my entry, because I was up, I don't know, $60,000 and did not want to round trip it to zero. And it was a really, really clean trade. I hit my 3-to-1 on a 51%er. I fucking banked it. I didn't sell any. I'm not entirely sure why I didn't sell any, but I didn't. And it got to my stop, and I do this thing where when a trade gets to my stop and I don't want it to get to my stop, I just remove it, take it off the line. And I did that exactly. I took it off. I just canceled it. I did this. I seem to do this a lot. Usually I lose money. Sometimes it helps. And it's now trading at 197. I'm going to be honest. I don't fully know what I'm going to do with SpaceX from this stage. I think first and foremost, I think the Warsh timing of this definitely slowed things down a little bit, because we kind of had like a sucking of liquidity. It was hard to tell if it was from SpaceX or if it was from Warsh, whatever. And it felt very Trump coin-esque yesterday. And now it feels even more Trump coin-esque. Heard the call it the only reach outs for Twitch. I like the intent of removing forward guidance is to encourage people to focus on economic and market data instead of trying to predict the Fed's next move. While this is a significant change, I think it only makes sense because it allows policy decisions to be driven by current conditions rather than expectations set months in advance. That's a really cool take. It's like, okay, everyone makes decisions based off what the Fed says they're going to do. So everyone's trading forward guidance, which then impacts what the market is saying, because people are trying to predict what the Fed is going to do. And then the Fed makes decisions based off the market, which is based off what they already previously said, which then makes the data bad. Is that right? What I just said? I get that. Thank you. That makes perfect sense. Fed gives forward guidance on what they think is going to happen. Market then trades off what the Fed says because they're trying to predict what the Fed is going to do. And so the market isn't reacting to the data, but rather they're reacting to what the Fed is saying. So then when it becomes time to make a decision, the market is not that good of a signal because it's being manipulated basically by the Fed. That was beautiful. That was absolutely beautiful what you just said. That was awesome. That was a first chatter. Sir Heavy Bags, where'd you come from? That was awesome. I get it. So I like that. I like that a lot. It's like, how are you going to use the market as a truth machine if you're manipulating what the market thinks? That was awesome. Somebody give him a sub. Please give that brother a sub. That was awesome. Thank you so much. Wow. We're going to just watch FOMC every day, and we're going to love it. That was great. Thank you for that. And for anyone else, if you're on YouTube, Twitter, you want to chat, twitch.tv/threadguy. Somehow, some way, the task force fixes this. But all right, so I stayed in SpaceX. It felt very Trump-esque, but I really still believe in the original thesis. I think this thing is going to go fucking parabolic. I don't really feel like it made the move. It made a move. It made a very strong move, but I really don't think it's done. If they carry me out and we go to like below 180s, I'll be done. It'll be unfortunate. I still think there's a floor at 170. It makes like this is an interesting trade. There's a floor at 175, I think. Because 175 is the number it has to stay above 5 out of 10 trading days before the first earnings report, which could be late July, which is very soon. It could be late July or it could be early August. And so I think that there is a soft floor at 175. And then I also know that they're buying Cursor for $60 billion. No, it is pretty big. It's like 10%. It's like a 10% unlock. It's huge. It's huge. It's huge. Also, they are buying Cursor for $60 billion at an average price of all shares at an average of 7 trading days as from when they acquired SpaceX. So the higher the price, the less shares they have to give to make up the $60 billion. And so there's that. There's also, the Cursor GitHub clone. That news got announced as well, which we'll look at. And so, I don't know. I still think it's being underappreciated how little float still exists on SpaceX and how long it's going to take for there to be more. And so I'm sitting in it. Now, if we think back to my thought process on trades, where I'm trying to stop board trades, I'm trying to take these event-driven trades only, I think I'm really, really good at. I think I'm really good at it. Like, I actually think I'm great at it. Ideas, unbelievable. Execution, very poor. Find myself in this spot where my execution is very poor. Very, very, very poor. Bink Marvell, run Marvell for 40 bandos, and then re-enter for no reason, lose. Run Zcash for a 6-figure trade, re-enter for no reason, give a bunch back, then short it for no reason, give a bunch back. SpaceX, bink it, hit the trade exactly how I want, add on the way up, just unbelievable execution. Round trip it. I seem to be doing this a lot, but so we got to work on that. So it is a little bit frustrating because I have this thought where I'm like, okay, if I only take these little event-driven trades, 3-to-1 odds, where I feel 50% or higher that I can bank it, we seem to hit every single one. I mean, I don't know. Recently, I seem to hit every one. Snap short yesterday would have been fun. Didn't take it. I seem to hit every one, but the selling part is very hard for me. It's hard for me to sell. You know what I like to do is I like to average up. It's like one of my favorite bits. I like to slam the way up. Like I'll be up. I mean, I had like a 20% of my perps book in SpaceX. Trades up 100%, and I'm slamming green candles, like slamming them. I'm doubling green candles. Like I hate to buy red. I never buy red, and I slam green candles. I slam green candles. It starts going up, and I'm fucking closing my eyes and just firing at it. I love to do it. And when it works, it really works. And I think for a lot of people, they don't like to do that, right? A lot of people are averse to doing that. But I love to buy higher. Like I always say like buy high, sell higher as is my trading strategy, but I'm not sure that's my trading strategy. I'm really not sure that's my trading strategy. It's the one I'm using, but I'm not sure that's my one. And so I'm looking at this and I'm like, man, ideas. I've basically been in every good trade over the last month and a half. Hype, I very much fumbled hype. I didn't really put a trade on for Anthropic Fable ban either. The only good one would have been Zipu. I don't even have an IBKR, so I didn't trade that either. Sneaky binked AMC, which we didn't talk about that much. Sneaky binked StubHub, which we haven't talked about that much. And so I think it's like a selling thing. I think it's a selling thing. I got to figure out how to get better at this, guys. I really do. Like the only difference between me and $10 million liquid P&L is not ideas. It's not ideas and it's not trigger pulling, which I think that's most people's problem. Like, guys, I'm good. I really think I'm good. I think I'm getting really good because I'm focused for the first time in a long. I've never been focused on trading in my life, and I'm really focused on it right now. And I'm really focused on it right now. And I'm in every good trade. I'm in all of them. But the problem becomes selling. So we're gonna work on it. Maybe I'll just fucking upload my trading logs and we'll. You know what I really have to do? You know what the real kicker is for me? Is it's not the notional dollar amount that matters. It's the percent. I got to start thinking in percentages because it compounds. It really compounds. I'm way too stuck in notional dollar amount. This is my problem. And I'm like, the dollar amount isn't enough, but the trade's up 100% in a day. You're up 100% in a day. What more do you fucking want, man? You ever heard of a Sharpe ratio? But Jack Schwager doesn't like the Sharpe ratio. So I don't know. I'm thinking about adding a pit task force to help me sell. Maybe, maybe not. But let's get into it. There's a fellow on CT that we can maybe get on the stream at some point, Sean McGuire, who his fund, Sequoia, owns 1.5% of SpaceX. I like this guy. I want to hear his takes.
For me, on a personal level, and I say this as someone, I think I understand this business very well, like better than most investors, better than almost any investor. I am personally going to hold my shares in this company forever, like quite literally. I think that, and sure, there's some things that could change politically or in the macro 10 years from now, but this is the biggest vision, the biggest mission of any company in history, going after the biggest markets of any company in history.
Does he have another take? I want to hear. Wait, let's I actually want to watch him into this. Sean McGuire, Bloomberg. 17 minutes. I can't.
There is a lot to discuss. I think should we just visa elves? Do you have a sort of thesis on that?
Yeah, look, I've said this publicly, but I think about SpaceX as there's 5 layers of the company or business. Layer 1 is launch. This is foundational. It's kind of the future of the company. Layer 2 is connectivity, which is in its early stages with Starlink and direct-to-cell, but kind of proven, and I think the compounding is pretty easy to underwrite. Layer 3 is compute, which today is terrestrial and in the future will be orbital as well. I think that the Google and Anthropic deals kind of show that is very likely to.
Yeah, their bag shillers are unbelievable. Sean McGuire, Gavin Baker, Mark Andreessen, like they're really good.
Work, and I actually want to spend more time on terrestrial compute later because I think it's a very, very exciting and underappreciated part of the company today. Layer 4 is the model layer. I think that's where, probably rightfully so, most investors don't know how to assess where SpaceX AI is today. And so I think we should talk about that more, and that's where Cursor fits in. And then Layer 5 is all the other bets. It's things that, people today don't even know how to think about it. That's TerraFab, that's a moon base someday that has a railgun launching, orbital satellites in space. But look, on the Cursor deal, I think people are underappreciating just how good that team is, and also how well they work with Elon and the company.
Our last guest called it an acqui-hire. It's a $60 billion.
You say what is railgun?
Acqui-hire.
I don't think when a company has a $3 billion plus run rate is the reported number in is a 3-year-old company. I don't think it's only an acqui-hire, but I do think that this is one of the best teams that's ever been assembled in the Cursor team, and I also think they've proven over the last few months that they can keep pace with Elon. Like it is. Unless you've seen it, it is impossible to explain the intensity and work ethic of Elon. And Michael and the team have kind of shown that they can keep pace and fit into this much broader ecosystem, adding value, on the.
Speaking of Michael, let's give this a quick look because, dude, stretch is $90, bro. It's the lowest price it's ever been right now. Whoa. Stretch your income. What happens after this? It's $90. You remember? Yeah, you remember when someone asked me if sailors slept well at night when Bitcoin is 60K? And I said yes. I don't think he's going to sleep super well when Stretch is under $90. I mean, what happens here? Like, the way I understand this mechanism, the only way you can get this thing back to peg is you have to increase the yield. So it's it's like 11.5% right now. In order to get this thing back, that 11.5% is not enough. And so he's got to increase it to 12, 13, 14, 15. Which in theory you can do. If it doesn't return, you have to add it more. But okay, if you have to add a couple percent, you get 12.5, 13.5. You now need 10, 20% more cash to pay out in dividends, you also need 10, 20 to raise 10, 20 more percent to support the total amount. And you also have 10, 20% less runway with the cash you already have. So you have to issue more MSTR, dilute shareholders more, raise more cash, and this whole time Bitcoin has to go up more to justify MNAV. And if it doesn't, you have to, there's going to be less demand for stretch. You're going to have to raise the yield more, and more, and more, and more, and more. That is a scary thought. I don't know. What's it going to take to get this thing back? I'm not touching it with a fucking, for 11%, you are out of your mind. I saw this one other take I really like about how to think about the Tesla acquisition. It's like, okay, SpaceX equity right now is so valuable. They just bought Cursor and an all stock acquisition. You could maybe think about they're going to, like Flood was in here saying they should buy Figma. They're maybe going to be looking to buying other companies, but I saw this really good take on the Tesla merger, which is if I put on Elon's this is friend of the stream, by the way. If I put on Elon's financial engineering hat, you do more acquisitions at the retarded valuation and pump the stock. And then you do everything you can to crush Tesla price so that you can get it much lower. Not focusing on that merger first alone will help do that. Pretty interesting thought. That Elon wants Tesla as low as possible so they can absorb it for as cheap as possible, diluting as little as possible to get Tesla. It's kind of a crazy thought. And so it makes the short trade a little bit interesting. I'm still afraid of it, deeply, deeply afraid of it, but it doesn't look very good. It really doesn't look very good. It is an interesting pair trade. And it's having a pretty ugly day. From the pit average short entry, yeah, SpaceX 192. If they really want to walk me out, I'm going to just sell it. You take me back down to 180s, I'm probably just going to sell it. But the pit average short entry is up like 8%. Did you hit XPL? No, I don't trade that coin. I'll never trade that coin. So I thought it was a very
beautiful stock,
unique perspective on the Tesla acquisition. I'm still not going to trade it, but it's a fun pair trade to watch. Let's see, Bitcoin getting nuked. How bad? Yeah. SPY, Cliff. Cliff. IGV, always. Sox is still green. What happened to gold? Is it bad? 2.5, Cliff. What else? AMC, man. Beta. AMC is a safe haven. But all right, let's watch. I want to watch Kramer, SpaceX, and then we're going to talk about some individual names. We got a bunch of stories. We also have some oil stuff to talk about. Let's go.
Prices are in the eye of the beholder. And to the holders of SpaceX, there's nothing more gorgeous than a price of $201.80, up $9.30 a day alone. That's where this stock went out on a volatile session with the Dow gained 329 points, S&P dropped 0.57%, and the Nasdaq tumbled 1.15%, with a real assault on the semiconductors, which are perhaps a source of funds to build positions in SpaceX. Now, we've watched the levitation of a stock that's fallen past some of the biggest stocks on Earth, like Meta or Amazon, and at one point today, SpaceX was on par with Microsoft at just under $3 trillion, though it pulled back after that to remain in fourth place. Sure, the stock is called SpaceX, but it might as well be called Elon Musk. There's no way this company, which could see losses for many years, deserves such a high valuation on its own. It only gets there because it's run by...
Is he reading a script? Is he reading a script right now?
Musk, who this weekend tweeted that the company might have $1 trillion in revenue by 2030.
Yes?
And more than $1 trillion...
He's reading a script?
...by 2031. Now,
so why don't I have a script?
SpaceX really has that kind of long-term sales power. Then it's a steal down here with a $2.6 trillion market cap. But sometimes
why don't I have a fucking script?
When he's talking about the distant future. His numbers are 3 times the estimate of Morgan Stanley, which did plenty of due diligence for the IPO. That kind of forecast is not made lightly. In the old days, by the way, before, say, Trump's second term, the SEC wouldn't let you get away with making such rosy projections right after the deal has been sealed. But these days, the regulators, I don't know, they don't seem to care. So what does it mean that the stock of SpaceX keeps charging?
There's absolutely no scenario in which I can watch this, actually. Shout out to Kramer though, but I don't know. I thought this was a really good take on Tesla. It makes me terrified to buy it. No interest. You would imagine Elon would want, if they are going to go through the merger, you would imagine he would want it to go. Oh, Tokes close everything. Close everything. Oh, this is old. This is old. This is old. But I like this take a lot. I wanted the Tesla short before, and then I got scared because of the merger. Never wanted the long, but this is definitely scary for late Tesla longs that are edging to the merger. Also, if I'm a Tesla holder, I would be kind of pissed. I'm not gonna lie. I would be fairly pissed. Is it not old? Like, what do you do if you're a long-term Tesla bull? Dev launches a second token. I don't really know. We know how it ends up in crypto. Oh, it's not old. Never mind. Close essentially everything will happily buy back higher, but that's about as inflation focused I can ever remember the Fed outside of obvious COVID. Partially because how I feel, partially because it's been a great few weeks, months, and I'm not giving that back. Yeah, Bitcoin dumping. Bitcoin is always dumping though. This is how it works. And then last but not least on SpaceX, and we're gonna move on and we're gonna talk shit about Snapchat, and then we'll do market close. Anson made a good tweet on it, or a tweet on it. Feel like showing more SpaceX shares. Think people have meaningfully underestimated the skew of demand supply with the float continuing to be number one traded stock by volume and also number one traded with options. Consensus bearish sentiment is going to lead more people to being squeezed, and general misunderstanding of progress the business has made across diversified verticals with short-sighted focus on current revenue numbers. Feel like this goes to number one most valuable company by market cap by end of year. 30% unlock in August, likely first local blow off top. No. All right, so let's take one more look. I want to look at DXY, which I think is ripping right now. It's ripping hard. Yeah, it is ripping hard. Jesus. Wow. US 2 years up 3 is up 4%. 10 years up 1.13. 30 years down 0.3. That's pretty scary. At the exact same time, Stretch lost 9. Oh my God. Stretch loses 90. Damn, I might have to just stack this bag right now. Very unfortunate round trip. Very, very, very unfortunate round trip. Stretch is under 90. And Bitcoin's about to lose 64 again. I mean, so are we just thinking that Warsh is not a puppet and he's going to hike the fuck out of rates? Therefore, we're panicking, ripping the dollar, destroying risk. We also still have some tailwinds of maybe Iran war as well. As it relates to Bitcoin, Bitcoin does not need a reason to dump. It's just the way that things are. I still think new lows are on the table for BTC, but we'll see. It's a pretty scary. That's a pretty ugly chart. Reminds me of the 97. It structurally looks similar to this, I think. You hold any spot? Not right now. I sold it to buy AMC. I sold it to buy AMC. I sold it to buy AMC, which has turned out to be a safe haven. It's up 35%, but it's all spot. All right, let's bang through. We'll do market close in a couple minutes. Let's bang through. I want to talk let's talk shit about Snapchat. We'll do war and oil. And then we will do a full market close segment. So, all right. Yesterday, this announcement came out, and it is not on Hyperliquid TradeXYZ Snapchat. I wish it was. And so we couldn't short it, but they announced their AR glasses. Oil is minus 30% since the FOMC's last dot plot was published at the March meeting. Despite that, the committee somehow chooses now is the right time for their hawkish pivot. Okay, Quinn Thompson doesn't like it. And then last tweet, Peter Schiff. Why are we reading Peter Schiff? But why not? Peter Schiff says, well, the government doesn't want to solve a problem because the solution is unpopular. It establishes a committee to study it. Warsh is now doing the same thing at the Fed. Instead of implementing an unpopular solution, he's establishing multiple task forces to study the problem. That's pretty funny. Look. All right. Snapchat, which was a CT friendly stock for a while. A lot of people on CT liked it. Base 16Z famously liked it a lot. I never tailed him. We also had a lot of fun with Irenic Capital. Came out publicly, took a 5% stake in Snapchat and went activist. And one of the bull cases is that they've been working on these Meta Ray-Ban competitors for a while, these AR glasses. And they finally unveiled them yesterday. This is what I could call an event-driven trade. If anyone took this, it's awesome. They unveiled them yesterday, and they are $2,200 glasses. Now, forgetting the price and how hilariously disgusting they are, for some reason, I'm just not that excited about the wearable thing. I'm not that excited about the wearable the same way I was never that excited about like 3D goggles at a movie theater. I don't want to wear them. I don't want to wear the glasses. I don't want it on my face. I don't want it on my body. I don't want it. I don't think that I'm going to need it, at least not for a long time. Like the AR tech has to get a lot better for me to feel like I need it. I like the idea of AirPods with the cameras. I like the idea of Siri on my iPhone getting really fucking good. I have absolutely no interest on wearing, I actually agree. Chris Camillo and Amit had a discussion about this. I agree with both of them that I have no interest at all on AI wearables. I really don't. I hated the Apple Vision Pro. I had one for a while. I guess I never had one, but I used other people's. It is super impractical, and it would have to get like the Apple Vision Pro would have to get 20 times better for me to use it. In which case, I will wear it all day, every day. It'll be attached to my face. But I don't want to wear that thing. I just don't want to wear it. And so I think Meta has found a nice little niche with the Ray-Bans. They're pretty good. They work well enough. They are like classy enough. They look good enough. I know enough people that wear them. Like they're relatively interesting as a product. They're kind of gimmicky, but they work well enough. And they're not that expensive. How much are they? Meta Ray-Bans glasses price. Yeah, that's brother, $450. Not bad at all. That's not bad. That's really not bad. $450. Like you could justify $450. Also, it's a Ray-Ban. Let's see. They own Ray-Bans. What percent revenue is Ray-Ban sales? 12% of Isilor looks. I've never even heard of this before. I wonder if this pumped when they announced. Like this, how does this do? Ooh. Oh, damn. It's down a lot. It's down 36% year to date. That's horrid. Damn. It's down a fucking lot. Anyways, I understand the Meta Ray-Bans thing. Okay. They're cheap enough. They have a use case enough. They're good enough. They're cool enough. And the product fundamentally makes sense. Snapchat launches their version, which first of all is fucking. I saw this tweet. Do you know how long you have to be microwaved by living in San Francisco, California, to think that this is a product that somebody would wear? Do you know how many years you have to spend in SF to think that this is something somebody would wear? Seriously, how many years it would take? I mean, that's like a multi-decade progression to think that somebody would wear this, first and foremost. I mean, doesn't he have like a really hot girlfriend? No input, nothing. Okay. Second of all, $2,200, bro. I make good money. Okay. I do well. The amount of things that I spend $2,200 on, very low. Very, very, very low, bro. $2,200 for a pair of glasses you're never going to wear is not happening, bro. Absolutely not happening. And then third and foremost, it's like, bro, what is this? They launched this? Seriously? I mean, this is a disgrace, Evan. This is this is a disgrace. Okay, I'm not a founder. I guess I actually am a founder, but I'm not a product founder. I don't build physical products. I know it's hard, fashion. I know the whole industry is difficult, but this is an absolute disgrace that they launched this for $2,200. I mean, give me a fucking break. And so for our situation, event-driven little traders, this was a sick one if you took it. They launch it $2,200. You can see exactly on the chart where they launch it. And yesterday, you can see exactly where they launch it. Like a giant red candle. Yesterday, it dumps 13% bottom tick. But it dumps another 7% today. And so you could have banked this for 19% on a short. 19% on a short. That was a pretty free one. That was a pretty free one on Mr. Evan Spiegel. 19% you could have banked this. That's a really, really, really sick trade. Shoku, we need it on HL. Trade XYZ doesn't have it, which means I can't trade it. But he did an interview on CNBC. And we have a little bit of time before market closes. And so I want to watch it. I would like to watch. Wow, what a sailor tweet. This is a really bad tweet. Wait, this is a very odd tweet. We do need Soxel on. You mean the backbone of the American economy? Odd post by strategy to lead 2 seconds later. We have 32 years of dividend coverage. Dividends 1.7 billion. Bitcoin reserve 55 billion. Oof, man. Damn, 89.10, bro. No, this is certainly not on Hyperliquid, right? You can't trade this on HL. I can see funding if you could. No. How do you trade it? I don't even know how to trade it. All right, let's watch him on CNBC. It's on later. Oh, EdgeX. Remember the EdgeX thing? Oh, it is on lighter. Funding is 0. It's flat. It's doing no volume though. Wow, it's $88, bro. Fuck me. God damn. All right, we'll come back to this. It's not that much volume on here, but that is fucking scary. But let's watch Evan Spiegel on CNBC, and then we are gonna do market close because there's a lot to cover in market close.
And she is in Long Beach, California, with the CEO of Snap, Evan Spiegel. Julia.
Kelly, thanks so much.
No, come on, man. You know how many years in SF you have to live to think this is a good look? Oh, you fuck. This is a disgrace. This is so bad. I mean, he looks like a fuck. This looks like an SNL skit, dude.
And Evan, thanks for joining us here today. You're wearing your new specs, which you just unveiled. They cost $2,195. The stock's down more than 5%. How do you address investor concern?
Damn, you know what I love about Chad News? For as much as I hate them, they just go for the jugular on questions. You just unveiled your glasses. They're $2,200 and the stock is down 5%. What do you think?
About the potential market for these.
Well, Julia, thanks so much for joining us here at AWE. It's been such an exciting day for the company and something we've been working towards for more than 12 years now to really bring...
You just unveiled your glasses. They're $2,200. Everybody hates him. You look retarded. The stock's down 5%. Thanks for being here, Evan. What do you think?
Computing into the world and make it more human. And I think it's something that people are really looking for in this moment where they feel like screens are distracting them. People are spending on average more than 7 hours a day staring down at screens instead of connecting with their friends and staying present in the world. And we think specs offer a totally new opportunity to bring computing into the world around you and help computing feel more human and more personal.
I hate the thesis.
During your keynote, you took a jab at Mark Zuckerberg and you said the folks up north aren't going to be able to copy these. But Meta right now is selling much lower priced devices. You have the $250.
He did what? Evan Spiegel. He did what? He did what? The folks up north aren't gonna be able to copy these. Evan Spiegel made this exact remark during his keynote. He was taking a direct jab at Meta, located north of Snap Santa Monica headquarters, regarding their history of copying Snapchat features. He boasted that the copycats up north won't be able to steal the new technology because Snapchat has filed over 7,000 patents for it. Brother, they do not want to copy these up north.
Glasses with AI via audio. They have an $800 version of these. Yours is so much more expensive. Aren't you concerned about competing?
Well, I think you raise a really interesting point. Today, if you look at the market, it's bifurcated. You either have smart glasses, which are lightweight and wearable, but aren't really capable of much. They're almost more like AirPods or something, a phone accessory. And then you have
AirPods, like the most successful headphone of all time.
Headsets, which are very capable and immersive, but they're also clunky and hard to wear. They shut you out of the world with virtual reality. And specs occupy a totally new category of computing. They're both
specs. They're glasses and they're specs.
Highly wearable, but also incredibly capable for immersive computing. So whether you want to bring a private display on the road with you, whether you want to play games together with your friends, or just use real-world utilities like navigation or real-time translation, specs are incredibly capable of bringing computing into the world around you.
But these cost $2,200. Who is going to be buying these for things other than playing games?
Well, I think the most important way to think about specs is as a computer, and so they're comparably priced to other high-end.
Bro, but my computer, I mean, what did you pay for your Mac? What did you pay for your Mac? I have like a maxed out Mac. Maxed out everything. Most expensive Pro, like fully spec'd out. This thing is an absolute machine. It was like 3.5K, 4K max. And this thing is like a super machine. This is like the most powerful computer I've ever owned. They sell MacBook Pro 16-inch M5. $2,500. Bro, the Neo Mac is $600. We're entering a super dystopian world where everyone has cameras on their face, everyone doing biometric scans. Privacy will be a luxury. Bro, private money, however we can long it. I don't know how to long it, but I fully agree. Privacy will be a trait for the rich, man.
Computers or high-end laptops. And so whether it's early adopters or the developer community,
by the way, I will buy a pair for stream.
For things other than playing games?
Well, I think the most important way to think about specs is as a computer. And so they're comparably priced to other high-end computers or high-end laptops. And so whether it's early adopters or the developer community, there are more than 450,000 developers using Snap's AR tools. So there's already a group of people who are so passionate about this vision of bringing computing into the world with augmented reality.
You're launching this new device, unveiling this new device just the day after Britain's prime minister announced that they're going to be enacting a social media ban for teens under age 16 going into effect.
Good interview.
Does introducing a new device complicate these youth safety issues even further?
I think what's so important about specs is that it offers a way to bring people off of screens and into the world in a way that they can share computing together. And this is something that's been so important to our vision and the mission for the company over the last 15 years. Whether it's things like ephemeral messaging that make conversations feel like
Snapchat is 15 years old.
Talking face to face, or stories that put content in chronological order the same way we've told stories forever, or even just opening into the camera with Snapchat, which opens into the world around you. Specs are an extension of that vision because they bring computing off of screens into the world around you where it can be shared with friends and family.
But there are social media concerns about youth safety, whether it's on that device or whether it's on a phone. And you're not only facing social media bans for teens in other countries, including Australia, another ban coming in France this fall, but also lawsuits here in the U.S. How much more complicated does it make your work fighting these lawsuits when you're introducing yet another device where teens might interact with people they shouldn't or see inappropriate content?
We take safety incredibly seriously. And in fact, with Snapchat, you have to add each other as friends before you can communicate. And we moderate content so that we can find any content that violates our guidelines and remove it promptly from the service. And this is an area we're going to continue to invest in because it's incredibly important to us. And we encourage parents to use Family Center, where they can link their account to their teen's account so they can supervise their use of Snapchat.
And just a final quick question. Your stock was down 30% year to date before today's announcement. What's your message to investors?
That we're committed to the long-term success of Snap and this extraordinary opportunity we have to bring computing into the world, and we can't wait for them to try out specs.
Obviously not a surprise on the pricing. I think what a lot of people want to know is just how oversubscribed this darn thing is.
That was bad. Dude, the last question. Last question before you go. Your stock is down 30% year to date. What do you make of that? That was brutal. That was really, really, really brutal. Also, yeah, that was brutal. Go to Specs website and look at the picture with Jimmy Butler. We have to buy a pair. Snapchat spectacles. Pre-order now. We have to. I have to buy a pair. Fortunately, guys, there is a event trade every day. It feels like this was a fucking binker opportunity. Was there a demo? It's just like so gimmicky, you know? Like, I don't want this in my... It's just so gimmicky. Like, you're not doing this, you know? My laptop's on my lap. I'm not doing this, bro. I will hold out on the glasses to the absolute very last day. But, all right, we got something way more important to do right now. Way more important than Snapchat spectacles. Is we have a market close to cover, and there is a lot going on. I got to get up really quick. I got to fill up my water. My voice hurts. Let me go fill it up. I'll be back in 30 seconds. When I'm back, we got market close. Lock the fucking strap in. It's a big day. A scary day, an ugly day, but a big day nonetheless. La 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 la. And I'm looking at the clock on the bottom of my screen, and it says that it's 4:05 p.m. Do you know what that means? Do you know what that means? Fucking. You already know what I want to know. First of all, if you're watching YouTube right now, like to chat with the TV/threadguy. But on a serious note, what are you buying? What are you selling? What do you like to make money on? What did you like to lose money? I don't think you'd like to buy or lose money on anything. But what do you like? What do you hate? What did you sell? What did you buy? What are you in cash? What looks good? What looks bad? Give me tickers. What do you got? 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 What do you like? What are you in? What do you like? What are you in? Shorting Bitcoin. Still long DXY. Shorting ETH. Long DXY in coffee. What else? What else? I need names. And a Solana short BTC since 66K. De-risked a ton. Might buy a good shit ton lower. Selling my soul. Still just an Apple. Small BTC short position. Wow. I'll take a look at this in just a second. What else? Give me names. All cash right now. I'm in cash and SpaceX. A lot of SpaceX. I'm also in AMC and StubHub, which are both green, but it's spot. Spot XPL. WYF5 for about 4 weeks and no one listened. DGXX. AMC. Let's go. Juice Cardi 69. Hype bouncing. What else? 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 Any names? Any names? Any names? I need names. By the way, I like the earlier stream time. I don't know if you agree. I like the earlier stream time a lot more. Averaging into Leopold stock. Nebius biggest buy today. Nice. Nebius is good. Long Aster. Long oil. I think it's better. We cover a lot more before market close. It's just a better show. Long VVV. Long Zeke. Switch to short SPY. Liking it as a UK viewer for real. You always start 5 a.m. my time. Make this stream time the norm. I am. Maybe a little bit. Maybe even a little bit earlier. I feel like we cover a lot before market close. And that makes the whole thing much more entertaining. All right, we're going to give it a look. Before we do give it a look, close SpaceX, short MS, TR. Earlier stream is way, way better. Good, 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 good. All right, quick bear porn for us. SPX falling a minus 1% FOMC day. Which isn't really that helpful. It's like a complete okay, return that day. The next day, -2, -3, -2.5, +1, +1, +1, -1.5. Isn't that helpful at all? It's just like kind of slop. What is the I guess 1 week forward return is volatile. It's definitely not flat. Half up coin flip, it's gonna move 2% either direction after a week. We'll see. We're probably due for coin flip down, but we'll see what happens. And on that note, let's take a look. Let's get into it right here, right now. Last call for the YouTube gang. If you're on Twitter, Twitch, whatever you'd like to chat, twitch.tv/threadguy. Let's give it a look. The SPX comes in on a pretty nasty day. Also, yes, rate hike odds are a lot higher. Let's check Polymarket really quick. On July 19th, wow. They are absolutely candling rate hike odds on Polymarket. Before the meeting, it was 2.3% for hikes in the July meeting. It is now up to 20% on Polymarket. This is probably going to be the market to monitor over the coming months. I have no interest in macro, but it seems that I'm going to be forced to care over the next couple months. It's up, yeah, it's pumped 10x. Polymarket from 2% to 20. That's pretty fucking aggressive. But all right, SPX, nasty day. Comes in, open flat. I think it was a little bit green at one point. It comes in down 1.21% at $7,420 on the SPX. The NASDAQ comes in down 1 full percent. The Dow comes in down 1 full percent. The Kospi closed last night up 1.6%. Today, it's going to be very interesting to see how this trades. It might get destroyed. I don't know how futures look on it. Russell down 1%. Q's down 1%. A lot of these charts, by the way, if we go lower, have this pretty nasty double top pattern. Like Q's just put it in here. SPX put it in exactly the same here. NASDAQ put it in the exact same here. SOX really put it in the same way here. Pause. And the IGV can't put it in because it just looks terrible all the time. And then here is actually up 1.2%, the bio index. This chart looks insane. This is one of my favorite charts in all of crypto, or in all markets. It's basically been sitting in this range for 205 days. Just chopping at all-time highs. Look at this. Chopping at all-time highs, ready to go. So, I don't know. I'm not a TA guy at all, but the market's a little bit scared right now. But like looking at the NASDAQ, it's like, okay, if this thing regains, makes a new high, horizontal line over like 30.7, if it gets back up here, and we do like a little like, choppy, and it goes above that, I think we're off to the fucking races. SpaceX 400, fuck it. But if it doesn't, and it goes this way, it starts to look pretty ugly. It starts to look pretty ugly if it goes the other way. So we'll see how it plays out. Crypto. There's pretty much only one chart that looks good to me in crypto. Bitcoin is scary. Who has a new Bitcoin position they put on in the last 2 days? Has anyone put on a new Bitcoin position over the last day or so? It was, I mean, man, it was green, but it wasn't. I longed rope and stool. Yeah, it wasn't like doing anything particularly interesting. I think it was just felt like a very structural, like technical bounce on BTC. I mean, bro, I sold my Bitcoin to buy AMC stock, so I don't deserve to say much. Well, I am up, but I don't really deserve to say all that much. But I sold my Bitcoin to buy AMC and StubHub, and I'm up. So I'm gonna just let this one simmer. I'm not gonna rub that in your face. But this is a I'm sorry it's a messy chart, but nothing's changed for me on Bitcoin. The one coin that everything has changed is Hyperliquid. Looks incredible. Unbelievably good. I think it sort of got cucked on this breakout today with larger market forces. But Hyperliquid 72.5. And in the very near term horizon, we have huge delta for positive news with CFTC. You have Clarity Act, potential for positive news. You have Anthropic IPO very soon. We don't know how soon, but soon. You also have OpenAI IPO. And man, if they could get these Chinese open source companies on Hyperliquid, Zipoo, Minimax, you could get some of these things on Hyperliquid. It has crazy tailwinds. But yeah, we are a little bit at the mercy of the larger market as it relates to hype. But it's funny, like Robinhood had a sick day today, or at least it did. I don't know how it closed. Robinhood had a sick open, and IBKR also had a sick open. And so the higher Robinhood goes, the crazier your price targets for Hyperliquid can grow. So this looks unbelievably strong, and it had a good day today, even though it's technically red. It still looks good. Zcash, not much to write home. I almost longed Zeke today on this news of, let's keep that Bubble Boy tweet. It's a song lyric here. Illinois. Here it is. I almost longed Zcash on this. So it's a song lyric. It's a song I played. I hate my job or whatever. Chill. It's a song lyric. I played it during the intro. Chill. Illinois Governor Pritzker signed a 0.2% tax on crypto transactions into law, including transfers between personal wallets, with the Crypto Council for Innovation calling it the most punitive digital asset tax in the country. This is insane. 2% tax on transfers, bro. And it passed. I think there's a video of this.
One thing is really close to home for me is the Illinois digital asset trading tax, which, Rebecca, was literally snuck into the state budget in the wee hours of the night or the morning, depending on how you want to look at it. The very end of the legislative session, they kind of just threw it in there to come up with some additional revenue. Very poorly conceived, targeting and scapegoating digital assets, treating them differently than all sorts of other products. And this is the first state to deliberately target digital assets and treat them and tax them differently. Big deal, and a lot of the industry are already condemning it. I'll tell you, one thing is really close to home for me is the...
I mean, this is nuts. Really, really.
Is in its strongest fiscal position in decades. 10 consecutive credit rating up.
No, nothing to do with crypto. This is, I mean, it's terrifying. And so it's like, again, privacy is going to be a luxury in the new world. It just is. Privacy is going to be a luxury. You'll own nothing. You will enjoy it. You'll own nothing and you'll be happy. Is that the quote from the old Davos? You will own nothing and be happy. You'll own nothing and be happy. Yeah. At the World Economic Forum. You'll own nothing and be happy. They're going to tax everything. There will be a camera everywhere you look. Everything will be recorded. Everything will be on camera. And privacy will be like a luxury for the rich. And so, I was talking about Tulip King today on the morning call. And I'm like, should I long? I was a little bit late, but is this a long Zcash on this announcement? And I kind of just came to the conclusion where it's like, all right, if you believe in Zeke or any of the other privacy coins, it's got to just be a longer term time horizon, because it's just leverage on short term leverage. It's just whipsaws. It's just whipsaws. And so whether your privacy coin of choice is Bitcoin, Zcash, Near, any of these things, Monero, whatever, it's pretty clear where the world is headed. It's pretty clear that privacy is going to be a luxury. I like the way he framed that. I'm really going to steal that from Flood. I'm really going to steal privacy as a luxury. But it just might take a while. And trading it whipsaw is just painful and tough and frustrating. But to see this, and I mean, bro, I don't know. There is something here. To see this is unbelievable. Privilege tax. 0.2% of crypto transactions. Something is going to get the flows from this. I just don't know what it is. But privacy is a luxury. I love that take. I'm stealing that take. Flood, thank you. It's mine now. I'm stealing that take. Anson, what's good? How are you, bro? We were reading your tweets earlier on SpaceX. But yeah, shout out to Tulip King on that. But anyways, that's Zcash. ETH looks like shit. Solana, I told you I'm down to stop being a bear cuck on Sol, but I switched to flat. I switched from hating to flat on Solana, but I don't know. I'm still not down for a lot of the on-chain stuff on Sol. I think Cards is the only interesting one, and something has got to be wrong with that token, because I don't know why it trades the way that it does. Bond yields are all up across the board, which is a little bit scary. Near is down 3%. VVV is actually up on the daily, kind of putting in a weird candle, but it is up on the daily. All right. Yeah, the pressure wasn't great. We already covered it, but rate hike percent chance for July was 2% before the meeting. It's 22% right now on Poly. So scary. This is also scary. Stretch is at $89 right now. I don't fully understand the alchemy that goes on in the strategy ecosystem, but what I do know is that in order to get this thing back to par, if it doesn't just trade its way back, you got to increase the yield, the dividend payouts. To increase the dividend payouts, your runway, you need to raise more cash. You have less money. You can sustain it for less time, so you need to loot more MSTR shares. And so you hurt the MNAV of strategy. And then it's sort of this recursive flywheel if Bitcoin doesn't go up. And yeah, I don't know. Weird spot. I know some people that are way smarter than me like it a lot. So I'm not here to call it the death of anything. But strategy looks like this. And MSTR looks like this. Total life support. I mean, look at this. This is strategy right now. Does anyone have a position in this? Tulip King, you're short. I mean, yeah, I think you got to just let it go. It seems to unwind pretty severe if it does on stretch. Because if nobody wants to add and bring that thing back to 100, they have to just keep adding to dividend payouts, adding the yield, 30%, 40%, 15%, whatever. Dilute strategy more, strategy goes down more, MNAV gets hurt more. Less people want stretch, add to the dividend, give out more yield. Dilute MSTR more, less people want MSTR. Bitcoin goes down more because people are scared, and it sort of just like eats itself. And so I don't look again. I wasn't a tokenomics expert when Luna happened. Wasn't really paying that much attention, to be completely honest with you. I never really got the whole MSTR thing. So I never really paid that much attention to it either. I just kind of ignored it. Wouldn't understand why you would want to buy strategy when you could just buy Bitcoin. But a lot of really smart people had Stretch as a catalyst for this run to 84 or whatever. And it worked to 84, but I don't know. We are in a weird spot. That would be the mimetic end to this bottom of the cycle as Taylor blows up. But exactly how it looks, I don't know. But it takes courage to be a pig, and strategy is a pig in lipstick. So we'll see what happens here. But yeah, Taiki was a buy. I don't know if he still is. All right, Metals Chads. We took a hit today. or you took a hit today. Number one is silver's down 3%. Gold is down 1.5, the Mando coin. And copper, which I like a lot. I really like a lot. Still, it's down 1.7% today on copper. Again, if it makes a move and it wants to rip above 6.6, 6.7, haha, I'm interested. Hormuz news. What do we have? I'll check oil. I don't like Hormuz news. How did I even click on that? No, there's no Hormuz news. That is such a scary statement to make, by the way. I don't want to hear Hormuz news ever. I don't ever want to hear Hormuz news. What is this strategy? Oh, they didn't. I thought they deleted it. Yeah. We have 32 years of dividend coverage through our BTC reserve. Our BTC reserve creates long-term durability. $55 billion of Bitcoin, $1.7 billion of dividends, 32 years of dividend coverage, 3.1% Bitcoin break-even ARR. I mean, that means selling. And by the way, if you can't sell $55 billion worth of Bitcoin. They cannot sell $55 billion worth of Bitcoin. I mean, how much could they get out? How much really could they get out if they have $55 billion worth of Bitcoin at 64K? Max half. They can't get more than half out. No way. Not easily. I mean, this is like if you have 7 figures in a meme coin that's at like 25 mil. The LP has like a couple $100K. It's like holding a I'm not sure they could get half out. Really, I'm not. Bro, they have like 5% of the supply. Think about it. They have 5% of the supply. I don't know how much you can get out 1 mil from a 25 mil meme coin. Really? Not easily. I mean, what's Card's market cap? How much could you pull out of this thing? $61 mil circ. There's 3.4 mil liquidity. How much could you get out of this? Like if you had 10% of cards. If you had 10% of cards at 62 mil, on paper you have 6.2 mil in cards. How much could you get out? Someone sold 700K the other day, they got slipped 30%. How much, if you had 10% of the supply, how much could you get out? It's 3.4 mil. Yeah, like it's that number, that Sailor number is like ridiculous. 3.4 mil. You could sell it slowly, right? You don't have to just stack it in one click. Yeah, 10% in one wallet or 10% in 1,000 wallets. 10% in one wallet, bro. You don't have to stack it. But what has Michael Saylor taught us about his execution? They're the worst execution ever. One wallet, you're completely fried. Yeah. Yeah. I don't know what the actual number is he could get out, but it is not 100%. I mean, you're nuts. You are nuts if he thinks he could get 55, if he thinks he has $55 billion of liquid Bitcoin. You are absolutely nuts. So anyways, that's what he thinks. He's wrong. But all right, oil, good on oil. Crude oil's down 1% of the day to 75.28 a barrel. He can sell to the USA Gov. They don't want it. The government doesn't want it. Trump's selling. The government doesn't want it. Nobody wants it. Saylor's the only, bro, he's the Eggman. There's no buyer for 5% of Bitcoin OTC. There's no buyer. He is, should I do it? Tulip King, do I read it? This is actually the most relevant it's ever been. I can't believe they posted that. All right, I'm going to read it. Ready? Michael Saylor is the Eggman. There's this old joke on Wall Street. A trader thinks that the prices of eggs are going to increase, and so he contacts his broker and asks him to buy 1 million egg futures at $1.70. Sure enough, A week later, the price of egg futures is $2.50. And the trader, happy to ride his winners, places an order for 3 million more egg futures. Next month, at $4.30 a piece, he pats himself on the back and restructures his liquid investments to buy another 10 million egg futures. At the end of the quarter, egg futures are trading at $7, and the trader finally calls up his broker and tells him to sell them all. The broker replies, to who? You're the Eggman. Not great. Brent as well. Yeah, except eggs are going down aggressively. Brent oil also down 0.44%. All right, here's what matters. Big AI, semis, a little bit of SaaS, AI bottlenecks, photonics, all the big AI stuff. Here we go. Number one, biggest gainer, SIVE is up 10%. Shout out to Serenity. Real biggest gainer that in NYSE is Redwire, Space Stock, up 6.5%. ARM is also up 5%. It made a new ATH today, but it retraced below. Broadcom is working with Anthropic to make ASICs, which is kind of a sick announcement. And it is up 4.3% today. Also a Space Stock, SPCE, Virgin Galactic Holdings, that's up 4%. Marvell's up 4% after news that the CFO sold 100% of his supply yesterday. Good to see that. ASTS, Space Stock, up 4%. Dell, 4%. ASML, 4%. Intel, up 3.5%, and it is teetering on this Trump P&L screenshot level, but looks decent. Rocket Lab, Space Stock, up 3.2%. Micron, up 2.2%, was teetering on a new all-time high, but it lost it. Bloom Energy, up 1%. AMD, up 1%. Cerebras, up 1%. Firefly, Space Stock, that's up 1%. All right, biggest losers today. Let's start from the bottom. Meta, Mag 7 looks terrible, down 5.5%. Adobe, Michael Burry stock, that's down 5.5%. SpaceX, close of the day, 191.82. That's down 5%. After hours, it is up 1.5% to 194.59. I'm still holding from 187, but big round trip is on the table, but we'll see. I like it. I think it looks good, and I think it is due for a squeeze pop, but we have some new tailwinds to deal with and to calculate in, which were not part of the thesis before. I was not thinking about Warsh. I was more concerned about the war. War seems to be over. We need to be concerned about Warsh and hikes now instead. AOSL is the D-Gill stock. That's on 4.5. Salesforce down 5. Microsoft Mag 7 looks terrible. Confidently under 400. Bill Ackman is down like 11% on the back. He bought very recently. He's 13F. It's down 4%. BlackBerry's down 4%. Amazon down 3.5%. Amazon is now 15% off ATH. IBM, that is down 3%. Oracle down 3%. Google down 2.5%. Looks like it's going to test that Berkshire level again. They bought at $350. Bought $10 billion of Google at $350 on a 5% discount. It's pretty close. Tesla down 2%. I really like the contrarian cap take that Elon wants to merge Tesla. You need Tesla to go as low as humanly possible, as SpaceX as high as possible, to dilute as little as possible to get this merger off. It's an interesting perspective. It's going to be a fun one to follow since this tweet went live, and SanDisk is down 1.6. All right. Some of our consumer, broker, fintech, and SaaS names. Enhanced Games, biggest gainer, 9%. I hate this stock. Robinhood, on news that they're laying off 10% of their employees, takes a big pump today, up 9%. It was as high as 112 on the daily. Third biggest gainer is AMC, which I hold a lot of on spot. It's up 35% since I announced my position on AMC in basically a straight line. Christopher Nolan, The Odyssey, is in theaters in less than a month, and we binked AMC pretty hard. Not selling. I have it all spot, but it's what I sold Bitcoin to buy. I sold Bitcoin to buy StubHub and AMC, and I outperformed like a year of holding Bitcoin in like a week. So that has been fascinating. Nebius, Leopold Aschenbetter, new all-time high, up 6%. Figma up 3%. IBKR makes a new all-time high. That is up 2%. HIMS looks very good. Is up 1.3, and GME is up 0.2. Biggest losers on this list. Let's start with Carvana down 10. Snapchat down another 8. That would, man, you had a 25%er on the Evan Spiegel glasses announcement. Special situations and long-term spot. That's all I want to do. Special situations and long-term spot. That's all I'm interested in. That was the special situations. Not an HL. Hard for me to trade it, but really, really, really sick trade. DraftKings down 8. Sweet Green down 7. Reddit down 5.5. MSTR down 5. Up 1.2 after hours, but looks ready to die. Shopify down 5. Ferrari down 3.5. Roblox down 3. Coinbase down 2.5. And Nike continues to put in one of the worst charts of all time. What would it take for Nike here? Look at this thing. Who did you know it looked this bad? Here's the monthly on Nike. Crazy. Crazy. I did not realize it looked this bad. I mean, it's just like, there's like no support. I mean, these are the monthly. There's no line until what? There's no line until 40. After that, I don't know, below, bottom at 35, 30 range. Bottom on SGA. I thought he was Converse. SGA, Nike. SGA Mole. I said Nike. Whoa. I didn't even realize this. I did not realize this. SGA Nike agreed to shoe contract after Thunderstar teases move from Converse in... Oh, Converse is Nike. Got it. Got it. An IG video. Yeah, I don't know what it is. Basketball shoes, I feel like, fell off as well. This is a nothing burger. They were already owned by Nike. Complete nothing burger. But it is Aura. But Nike's just dead, man. I don't even wear Nikes. I feel like Nike got killed by niche. You know, Nike used to dominate every vertical. Now you had Lulu, then you have Aloe with sneakers, Asics, Hoka, AC. Basketball shoes, fine, but basketball shoes used to be casual as well. They're not casual anymore. I don't know. Jordans are dead. I wear them still, but they're dead. It's all dead. All dead. What's the name of the guy from China who pumped his stock 40% after announcement? It was Lenovo, right? It was Lenovo, I think. Zhang Ling. This guy, yeah. Pumped at 40%. Pumped at 40% on the announcement of brand ambassador for Lenovo, which doesn't even make sense, but it is what it is. Nothing else. Airbnb down 0.5%. Oh, Allbirds. What do they do? They changed their name. Just because they changed their name? Allbirds, the GPU provider. Was that it? They pumped because they changed their name? They already got the AI pump, though. They already did this. Look. First one, look at this. It already happened once. This was announcement that they're pivoting to AI. It was up 900%, top tick, closed 576%. This was announcing they're changing their name to Smartbirds, which gave you 78% top tick. Right now, like 40%. It's a $48 million coin, bro. Dude, it's worth less than it's $48 million. It's worth less than cards. $48 million. That is tiny, bro. 48 mil is that's the total market cap. I mean, you could like, there's like CT KOLs on crypto Twitter that could pump this thing. I mean, we could rip this thing, really. An Ansem tweet would candle this thing to all time. I mean, Ansem could like candle this on one tweet. That's crazy. I don't even want to look at on chain. I do want to look at our Hyperliquid traders though. All right, number one, Loracle, who was up 40 mil 3 weeks ago, down 7 mil last week, is now back up to $6.4 million on P&L. Zeke long is up 5. Hyperliquid long up 2, up a quarter. Near's up 120. WorldCoin long is up 1.2. Got 100K on a new Solung, 17x. That's a weird number. Up on Tesla and nothing else really to write home about. Well done though. Garrett Bullish is down 13. Okay, let's see. Zcash long is up 2.2. He longed Uniswap with $1 million margin. That's down 200K. That's a rare Uniswap. And it's down 14 mil at 64K on his Bitcoin long. SPX 6900 had a crazy candle last night. Yeah, I think it got listed on Upbit I think Upbit. There's one of these Korean exchanges, which is actually pretty rare for that to happen. But all right, that's market close. Now we have a couple topics we want to talk about. First, I watched one of, if not, we have to talk about I have a couple trading clips I want to watch. We have to talk about Chinese AI, and then we have to talk about crypto. Bang, 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 bang. First and foremost, I watched this clip. Okay, we have this thesis. It's my favorite thesis, right? Everyone will trade. Democratization of info, democratization of capital, retail as motion. It's a big part of the SpaceX thesis when I originally took the trade. It's happening in real time. It's really fun. The CEO of Goldman did this interview, and I feel like I've never been more validated on what we believe than watching, former CEO, excuse me, than what I just watched. Before we do that, I'm being told there's a Google candle that we need to look at. What Google candle, bro? Y'all be in here just bullshitting sometimes. Y'all just come in here and bullshit every once in a while. But all right, let's watch it. Let's watch it. 1.25. It's really good. It's really good.
1% is in just index funds or boring stuff. What does it look like right now?
I invest in risky assets. That's what's fun for me. And that was what I did my whole career.
1% is in just index funds or boring stuff.
Well, index funds are risky. They're diversified across different things. But if you're in a diversified equity ETF, you're in equities.
Yeah.
And equities is a lot different than being in debt, and it's a lot different than being in short-term money markets, which is more safe. And so it's still risky. I would say that I am 98% in risky assets, of which, 95 of the 98 are equities.
95% of his port are in like single name equities, bro.
Probably a quarter is in ETFs, and 75% is in a single stock. And if I'm wrong, it's 10% are in ETFs and 90% are in single stocks, because that's what I like to do.
Okay, of that, I'm so curious about this. So I'm in 90% just a Vanguard fund, and then 10%.
Well, that's sensible, because this is what you're not doing this. You're not doing investing for a living.
Of course, and I'm probably not going to change that, but I'm always interested in seeing how other people like to invest. So of the 75%, what are some of your biggest holdings?
Well, I would say that right now I'm very heavily focused in tech, and have been for a long time for good reason.
Which companies?
All the big hyperscalers and second tier ones.
What's a second tier one? What's an example of a second tier one?
If you have a big hyperscaler like like the Googles of the world and the Microsofts of the world and Nvidias of the world, maybe a second tier version down the.
Bro, he's all in high beta, like the shit they're like Bubble Boy's talking about on Twitter. His net worth is in high beta semis.
Slightly down the food, no insult intended to Larry Ellison, maybe Oracle. I don't have to. I change my things all the time, so it doesn't matter, specific names. I'm speaking in terms of category. That's how I think of it as, not necessarily the bluest of the blue chip ones that are a little bit riskier. And by the way, they're companies that are probably going to be gigantic companies that some people know about today and are investing in. I never heard of them because I'm just not always, I'm not walking around the corridors of Silicon Valley shops, and I don't know the new thing. And it might be commonplace knowledge over there, but it's not with, everybody knows the world's a big place and everybody always knows their corner of it.
So you're bullish on big tech? Anything else?
I'm generally bullish. And by the way, it's been good to be bullish on big tech. And I'll stop being bullish on it when it stops going up.
For the foreseeable future, that's what you're thinking?
Yeah, my foreseeable future is when I finish this conversation with you, and then I'll check it again.
Are you trading every day?
Yes.
That's crazy.
No, it's not.
I fucking love this game, bro. I fucking love it, man.
It's like
I don't think it's really crazy. It's just crazy for me. Yeah.
Oh, no. I multiple times. It's taking a lot of discipline not to look at my screen while I'm talking to you.
Right now.
It's like it's background noise. It's like, some people like to listen to music. You'd say, how much time do you spend listening to music? Well, they're not sitting at a desk, slumped, hunched over, just listening to music and doing nothing else. Maybe if you're a record producer, you do that. But normal people are listening to music while they're doing other stuff. To me, the market is like music. Yeah. It's out there. It's going on.
What trades did you make today?
I think today I may have, I'm not sure what I did because I put in orders because knowing that you were going to tie me up and I wasn't going to be able to look at stuff, I told people what to do.
I'm so curious.
To sell, maybe sell some, energy is rising. I buy and sell a lot of stuff. I don't want to talk about specific things because people listen to these things on different days and they'll start, they'll sound smart or stupid depending on what day it is.
Do you have a team?
Oh, just me.
Just you?
Yeah.
And so you're at your computer doing it on your own?
No, I'm not at a computer. I don't have a computer. I have an iPad.
So you're on your iPad doing it?
And a phone.
Are you, and you're what's your source of information to make decisions?
I chat with people.
Sometimes, texting?
What?
You're texting them?
Yeah, but usually I call. Somebody will text me, I'll text them, and then I'll get tired of tapping things out, and I'll be tired of fixing the typos because of my fat fingers. So I just call people up.
And you're doing that all day?
Some people I follow the news, but I also follow business news. And I like, companies are like little stories, and it's like gossip.
What do you read?
I read, all the newspapers. Of course, I start with the New York Post, the paper of record.
Yeah.
And, when I read papers, like the Journal, the Times, the FT.
This is like the greatest thing I've ever listened to in my entire life, by the way.
Bloomberg, I look at, very financially, finance
you have
oriented.
Subscriptions to all of them?
Yeah. No, I don't steal them. Yeah.
Well, how many paywalls do you hit and you're like, oh shit, I'm not going to read that. I got to find a different article.
Oh, no, that happens every once in a while. There's something esoteric where I click on something and it turns me down. So I don't read it. There's a million other things. But I do this and I have to think of, gee, why am I quibbling about this? I will tell you, I am still watching commercials on Netflix.
Are you really?
Yes.
That's hilarious. Have you outperformed the market significantly?
Yes, I have for a while. And that's not because of, it's because of where I focus. So I started to say I'm mostly and have been in tech, energy. Don't forget I have a background in trading energy.
Yeah.
And I'm also in financial services because I know a lot about financial services, having been in the financial services. So those are the three areas that I've been focused on.
I'm sure you still own a bunch of Goldman.
I do. I tend to have some affection for the organization that I spent almost 40 years in. Yeah. So yeah.
The ex-CEO of Goldman Sachs trades all day, every day. His own portfolio, 95% of his port is in single name stocks. Most of them are high beta, not chips, not blue chips, excuse me, not the mags, but like tier 2, tier 3, as he quotes it. High beta. He trades all of it on his iPad. He doesn't have a computer. He just uses his phone and his iPad, and he's doing it all day. He's watching the charts all day. He said it's like music. Charts to him are like music. He does it all day. You can leave the pit. It never leaves you, bro. You're a lifer if you're watching this stream right now. If you've been here for 2 hours and 22 minutes, and you watched FOMC Kevin Warsh give a speech, and then you're still here, you know you're a lifer, right? There's no look at this guy. He worked at Goldman for 40 years. What does he do when what does he do when he retires as the CEO of Goldman Sachs? Trades all day. Trades all day. That's what he retired from Goldman Sachs. What do you do? You trade all day. That's it. Did you make any trades today? No, I put in orders because I knew you were going to tie me up. It's taking deep discipline not to look at the markets right now as we're talking. He's on one podcast. He does like a podcast a year, and he can't even focus on it. You guys are lifers, man. You are. You're a lifer. You're here. You're a lifer. There's no going anywhere. It's like the best clip I've ever seen. It's like the best clip I've ever fucking seen. Ever seen. I want to watch this as well, and then we're gonna talk about China. I thought this is one of the funnier clips I've seen. There's like crazy Warren Buffett schmear propaganda going on right now. I actually heard an interesting trade thesis that people are like Berkshire. People like Berkshire because it is like a trades like inverse to risk, I guess, where they have so much cash. Is this chart right? Yeah, I suppose. They have so much cash, and they're pretty de-risked. BRK.A. Let me see. There you go. Yeah, okay, cool. They have so much cash, and they're pretty diversified away from the AI bubble. Now, they did take $10 billion and slam it into Google at 350, but I think they're generally pretty risk off. And so if the market starts getting destroyed, they have a lot of stuff that's like inverse to AI, like airlines and like Coca-Cola. And they can, I mean, they could buy everything if it got bad. But so I think Rhino tweeted it actually. But there's this Warren Buffett smear campaign going on right now. And Warren Buffett's like the ideal rich guy for communists because he's barely sentient. He's like the bee dutifully making honey by instinct. And if he finds one day the beekeeper came and scraped his honeycomb clean, he'll just keep on making more. And so there's this crazy smear campaign going on, and it's all because this Peter Thiel clip.
The other thing I think is sort of problematic, at least, about Buffett is that, he's become the richest man in America by avoiding technology altogether. And so it's always technology,
being proud
sort of
being proud of it.
Not doing. So would you rather invest in a spaceship company that goes to Mars, or would you rather invest in a Mars candy bar? And in the year 2200, when people live on Mars, they'll still be eating Mars candy bars. Spaceship companies will come and go, so you only invest in candy bars. And there's a way in which it doesn't work for the whole thing, and that's the aspect of Buffett that seems very, very fake to me. Is even if he personally can do it, it doesn't work. You can't have a country in which everybody's Warren Buffett. The other thing I think is sort of problematic, at least.
But like, bro, Warren Buffett is 95. Bro, he was born in 1930. Can you blame the guy for not being that excited about the AI trade? He was born in 1930, dude. He's like a Great Depression's 1929. He's like a Great Depression baby. Bro, he also was born at the generation. He was born at like actually the century bottom. He was born in the century pico bottom. Can you blame him for not being super hype about recursive self-improvement? But he's born in 1930. It's like, what is he supposed to... What do you want him to do? I can't imagine he's a huge... he's not using Fable. I mean, he was buying the S&P at like $1. It was 1. SPX was 1. Airlines to him are like AI to us. That's crazy. Airlines to him are like AI to us is nuts. I mean, what was the SPX in the year 1930, bro? Even track it? Yeah, they do. Damn, they got this thing at 1871, bro. And we got this bitch marked up, bro. Damn, January of 18. There was someone that legitimately bought the SPX for $5, bro. January of 1874. But he was born in he was born in this candle, bro. SPX was $15. How much is it up? Bro. Oh, I'm really fried. Bro, it's up 50. It's up 50,000%, dude. It's up 50,000% since the year he was born. 50,000%. Also, who owns Mars bars? It's up 50,000% since he was born. It's not publicly traded. It was founded in 1911. Like, yeah, I don't blame him. It's like hits close to home, It's like probably how I feel with like iPhones. First one came out when I was like 10, 95. I'm on like iPhone 70. It's like, yeah, I would feel pretty attached to it. All right, switching it up. There's some crazy news on the AI world right now. And the timing of this is unbelievable. So I haven't used it yet. I haven't even tried it. But GLM 5.2. GLM 5.2 by Zipoo. ZAI just came out. And the consensus is basically that this is the second best model of all of the models outside of Fable, which we no longer have access to, which would then, as a default, put this thing to number 1. It's allegedly better than Opus 4.8. It's allegedly better than Codex 5.5. And because Fable is gone, now it's a tough bar. It's like, we know Fable exists. Fable is the bar, but it's gone. And it is gone for the foreseeable future. I don't know when we're going to get Fable back. GLM 5.2 is the bar. And what's so fascinating about this is that, you know, we had Hasib on. Okay, so Hasib makes this post. For a long time, I've been saying that the gap between open source and closed models is going to widen because of the data gap, hardware gap, and increased restrictions on distillation. I was wrong. Z.ai by Zipoo, GLM 5.2, is on another level. Incredible benchmarks on this model and early vibe reports are strong. Now running my Hermes agent on GLM 5.2 via Ask Venice API will report back how it feels. I remember when we did the China maxing segment. If you remember this, if you're a real OG of the stream, we did this whole presentation about China maxing. And this was a while ago, 6 months ago, maybe less, 4 or 5 months ago. And one of the things we discussed is that there's this discourse in America that China is not a real competitor on frontier AI, LLMs. And they're just stealing American models. Sam is pushing this narrative. Dario is pushing this narrative. All the VCs are pushing this narrative that they are just stealing American models. And the one point that I made is that while that might very well be true, they are far and away the leader in video. And so if they are able to lead in video by, you know, Tencent, by like a significant amount, if they're the best frontier video AI, then I don't know, feels to me like there's a scenario in which they're not distilling and they are actually just producing incredible output with tight constraints. And that scenario is maybe underpriced because that's bad. Because the economics are a problem, right? Because they're open source and the requirements are very low and they're very fucking cheap. Very cheap. That's a problem. That is like a under-discussed bear case, I think. Because we're already hitting this, you know, I don't understand the economics of AI that tight, but I know enough. And we're already hitting this like headbutt. You're seeing the narrative get pushed. Uber, you're seeing Google come out. You're seeing Microsoft come out where they're limiting their devs because tokens are so fucking expensive. We're exiting the subsidy era for Anthropic and OpenAI. These tokens are so expensive. But the differentiator has always been that the intelligence gap is so severe, you'll pay way extra. You'll pay exponentially more for incrementally better intelligence on the frontier labs. Therefore, America will win head and shoulders. But there's also this thought, Philip King pilled me on this, which is like, okay, what if, you know, say the model 120 IQ, 125, 130, 135, 140, 145. What if we decide that for most of the body of white collar work, you only need like 120 IQ? You need like 120 IQ. That's the bar. Anything more than that is a luxury and it's nice, but you don't need it to get the tasks done for most of the body of like the labor force, right? Average college grad is 110. So let's say 115, a little smaller than college grad, 115. If that's the bar and all open source Chinese models are there for 10x cheaper, are you really going to pay like, you know, 10x more to be on the bleeding edge to go from 115 to like 116 IQ to 117 IQ? Like what happens to the economics there when most of the body just needs 115 and it's uber cheap? I don't know. It's a very interesting discussion, but as it currently stands, there's export controls on Fable. No one in the world can use it, even Americans. And the best model is open source. It's fucking cheap and it's Chinese. And now the timing of this So yeah, ZPU team has onboarded every major domestic chip maker in its quest to have stable service. More importantly, it expects Atlas 950 SuperPod to be its future strong computer base. I don't know that much about this. And then what's the last? Okay, the thing that's unbelievable about this is that ZPU's public. It's a Chinese company, and they basically launched GLM 5.2 on the same day that Fable got hit with export controls and got banned. And so I was trying to figure out what the trade was. It was maybe VVV, but the VVV doesn't really make sense for export controls. I think VVV candles 100% when ChatGPT announces that all their chat logs got leaked. Right? That's when VVV does 100% in a day. Oh, Anthropic announces that everyone's chat logs got leaked in some Ashley Madison type of situation. You panic, you buy VVV for private. Tau doesn't make any sense. Tau's retarded. I didn't really know what to buy, and so I ended up buying nothing. But I think there's a special situations trade every couple days. SpaceX, Binker, Snapchat short on the $2,200 glasses, Binker, and then Fable export controls. That's almost like a black swan. That's like a special situations. Fuck event driven. That's like a special situations type of trade. And so from basically bottom tick, you can very clearly see where this was announced. So forget bottom tick. On ZPU, bottom announcement of Fable to top tick 48%, and currently at flow where it's trading at right now is 36% gain on this. Crazy. Now you could argue it deserves plus 36% on releasing GLM 5.2, not on GLM 5.2 and export controls on Anthropic. What is US market cap of ZPU? 65 billion. 75 billion. This is a little bit old. $75 billion. $75 billion. We're saying it's more? Let me ask. Let's see. By the way, instant ChatGPT is insane. 100 billion. 100 billion. So, okay. OpenAI is like a trillion. Anthropic's like a trillion. ZPU's 100 billion. It's the best model. It's like 10x cheaper. And they just slapped export controls on Fable. No one can use it. And there's no, by the way, not only can nobody use it, but wrong tab group. Right tab group. Not only can nobody use Fable, but there is no timeable return for Fable. So think about it. It's ZPU right now is 1/10 the price, market cap wise, of Anthropic. And until further notice, it's the best model in the market. And so this was there's a event driven type of trade every day. It feels like this was a crazy one. Could have banked it for 40%. The second they slapped export controls on Fable, they banned it, and this thing just starts candling, bro. Candling. It's 1/10 the market cap. It's very interesting. Now there's some friction here because it's on IBKR. You got to apply to get access to Hong Kong stocks. I don't even have an IBKR account, which doesn't help. It's not on the perp dexes, so I don't even know how to trade it. But it's a wild development. Now there's another development too, which you think about is like, okay, I'm trying to figure out, like, I had this thought today. Which is, when is the US gonna slap export controls on Chinese models? Like, when does the US get threatened and say, fuck that? If you're an American company, you can't use, it's a security risk, supply chain risk, whatever they hit Anthropic with the first time. You can't use open source models in the US. You can't use Chinese models in the US. Like, when do they hit him with that? Feels likely to happen. And then what's the trade on it if they do? I have a couple tweets. Let me see. No, I don't think. Okay, yeah. So it says like I have a couple tweets. Yeah. So basically, the opposite just happened. but unclear how long they keep it for. So the opposite basically just happened. A bombshell exclusive report from global news agency Reuters reveals that the U.S. government has quietly shelved plans to blacklist over 100 high-risk Chinese tech firms to avoid escalating trade friction with Beijing. So they were about to do it. They were about to blacklist 100 Chinese AI products, and they didn't do it. They backed out. You say Reuters like Hooters? Reuters. An interagency review panel officially approved adding these entities to the Commerce Department trade restrictions list last year, but administration officials have delayed the publication. This represents the longest gap in trade blacklist updates in over a decade, stalling critical enforcement tools despite severe intelligence warnings. They know it's a problem, but you can't really stop it. The delay directly shields controversial artificial intelligence startups DeepSeek and top memory chip maker Changjin Memory Technologies, an organization previously designated as a Chinese military company. Intelligence reports warn that DeepSeek directly supports Chinese military network, uses overseas shell companies to bypass semiconductor export controls, and launches digital campaigns to steal capabilities from Western tech. So think about this. They are openly saying they think DeepSeek is stealing U.S. models and it's a threat, but they don't want to block it. Critics warn that delaying these enforcement tools creates a dangerous vulnerability, allowing state-linked firms to continue stockpiling sensitive American technology. So a trade idea that I would think about as well, there's a couple here. One, what's the trade idea if the U.S. Reverses course and blacklists Chinese models? What's the trade on that? What is the trade on a 5 to 10 year time horizon if Anthropic continues to get exponentially better and the U.S. government continues to hate him exponentially more, right? Because look at this. Like, the U.S. government hates Anthropic, but Anthropic is the best model. It's the best model. Like, look at this. Look how happy Sam is. This is G7 summit happening right now. Look how happy Sam is. Look how happy Dario is. Sam sitting next to Trump. Dario sitting next to France. Crazy. And so there's a trade idea there. It's like, okay, what happens if saying Macron, if Anthropic gets exponentially better, US government hates Anthropic exponentially more. And then I don't know, I guess the third, so okay, US bans Chinese models, there's a trade there. The government and Anthropic butt heads more, there's a trade there. Another one is, I want to do a segment on this because I don't even know the implications of this. But if the U.S. tries to shut that shit down in Anthropic, or like nationalize and take over, like fully take control, what can they do? How far can they push? What is the precedent to do this? Can the U.S. ban Anthropic as a company? I don't know. Is that possible? What can be done there? It's something to start thinking about, because the tide is shifting on these AI companies, and what has just been done is wild, really.
The drivers are of the widening gap between Chinese open source models and American closed source models is.
China's made a terrible mistake not, taking, it feels like the administration has been willing to let them buy H200s or B30s.
Oh, yeah.
And I think they're on this, they have this crazy belief that, our own internal chips are good enough. They're not.
Yeah.
And then, I think what's making them think that is that Chinese labs are very, very good at distillation. Mm-hmm. Somebody told me it only took 160,000 reasoning traces from 01 and 03 to get the original DeepSeek.
Yeah. I don't think this take's going to age well either. A couple days old.
They're very clever at industrial scale distillation, running it through multiple APIs.
Mm-hmm. I think it's wrong about this.
API from, we've all seen those iPhone farms in China. Yeah. They've got the same thing for distillation, and they've got, 100,000 endpoints distilling.
So what? They distilled Fable in 2 days and released Geom 5.2? No. No. It's not what happened. It's not what happened.
These models across
It's
every
not what
API
happened.
available. They've gotten really, really good at that. But man, all that goes away if people stop releasing these models at the frontier. And I think Mythos is a sign of things to come there.
Cisco, critical infrastructure for the AI era.
Look at BYD. This? Yeah, by the way, we did say the same thing about Chinese EVs. Now look. What is this? Looks good. What does it do? What do they do? So yeah, biggest EV company, Boyd Gaming Corporation, it's worth $6 billion. I think it's the wrong stock. 6B? Yeah, it's not the real I know what BYD is, by the way. It's the wrong one. It's this. Is it this? I think it's this. Yeah. It's this. Yeah, they mog everything. Yeah, the Xiaomi. Yeah. Okay. Xiaomi mogs them. Yeah. So this has been a crazy development in Chinese AI. And I don't know. I think we've done a pretty good job covering this. Like, I'll actually grade my coverage on this. We were really early to it. We kind of got like pushed off course. We didn't do that many updates, and I'll come back to you with like a bombshell. I drop in a bombshell. I understand that. I come back with a bombshell, but it's an important one, man. I don't know what to say. I don't know what to say. So, also, Dario, this is probably this is the last thing on my doc for today. Is Dario just did an interview. DNAP, is it good? Yeah, you know what China can't distill? Space exploration. That's a good tweet. Mars colonies. That's a good tweet. You know what SpaceX can't distill? Mars colonies. You know what China, excuse me, you know what China can't distill? So good. Banger. Colonies on Mars sounds better. Okay, let's watch a minute. How long do I have to watch this? Couple minutes? I didn't watch it yet. It's like 5 hours old.
You know, I think I tend to think that is the most important thing.
Soon after, they gotta get this brother off the fucking microphone. By the way, make podcast equipment more expensive. Do something. Get him away from the camera, please. God, get him away from the camera.
Claude Cowork was released. $285 billion in market value vanished overnight. Traders called it the SaaSpocalypse. If AI continues improving at this pace, how much of traditional software gets replaced and how fast?
Yeah, so, you know,
Dario, man.
This is one of these questions that it's kind of very hard to predict in advance, right? If you could predict it perfectly in advance, then people would, and they'd make a huge amount of money on the market, and they'd always be right. So, you know, no one knows exactly what's going to happen. But I would note a few things, right? All of these traditional software companies have a number of moats. I think what's going to happen is some of these moats are going to go away, but others are going to stay around, right? The ability.
He's clearly got smacked for his previous PR responses, right? This is a better response than before.
To quickly write software, I definitely think that's going away, right? If your moat is we wrote this complex software that no one else can write, like, good luck, you're not going to be able to defend that. But I think folks have customer relationships. Folks have know-how of how the field works. Folks have unique domain knowledge. So I think my advice to all of these folks is obviously, you know, don't be complacent, don't ignore it. Make a list of all your moats and be very aware that some of them are going to go away, while others are going to become relatively more important because they're limiting factors, and there may also be new moats. And I think those that deftly respond, that, you know, lean into the list of moats that are still present, as well as the new ones, will do well. I think those that are complacent, that kind of, you know, just delude themselves that what worked in the past will continue to work, they're not going to have a good time. So that is the advice I would give. And, you know,
Just nothing new though. Why does he even do these interviews? What is the point of this?
I think at the end of the day,
what is the actual point of this? I
would guess, I mean, it depends what you call SaaS and what you don't call SaaS, but like, I would guess that the software industry gets larger, not smaller, although there will be some big losers.
Explain that.
I just think the pie is getting bigger, right? Like I think with AI, like the pie is getting bigger. The existing incumbents may be smaller in relative terms. Some of them may go down in value. Some of them may even go out of business if they don't adapt in the right way. But I think you see this often when growth is really fast, right? If what's possible with AI grows by 10x, it's very easy for an existing incumbent industry to go up by 1.5x, right? Just
nothing. Okay, I got one more tweet. I was distracted. I was watching something more important. Yeah, Bloomberg loves the show. I was watching something more important, actually, than the Dario interview, which is this.
Thanks for joining us here today. You're wearing your new specs you just unveiled. They cost $2,195. The stock's down more than 5%. How do you address concerns about the potential market?
Oh, Ansem, you missed the Snap segment, huh? Well, I'll give you a quick refresher. Evan Spiegel just launched the $400 Ray-Ban Meta glasses, except they're no, I'm over-exaggerating. They're $2,195. And he said they are priced on par with very powerful computers. And Snapchat stock was not the biggest fan of the announcement, and so we are down about 20%. My favorite take on it is do you know how long you have to live in SF to think somebody's gonna wear that? It's my favorite take.
More things like that.
You know, there's this argument, why wouldn't the government take you over? Why would they let a private company control technology that's so powerful?
So I actually think that's a very serious question, and I share those concerns. I don't think the government should outright take us over, but I would put it this way. I would say, just to back up and describe the situation, every previous powerful technology we've seen in history was either built by the government or originated with the government. So nuclear weapons, obviously, initially built by the government and pretty much built by the government after that. But even like the internet, GPS, cell phones, all the R&D was done in the labs and the federal labs and the universities. AI is the first technology that's been built in the private sector, and where government has not really had a serious role and is coming in late to the game. I think that's actually a dangerous and unstable situation. It is not the situation I would have chosen. There's not really an alternative, like, this technology is possible to build, our adversaries are building it, has economic value, like, it's going to get built. The issue is the government not doing it, not the private sector doing it. I think we need to think about checks and balances on power. So I think there need to be checks and balances on the power of the AI companies, right? We have this thing, the long-term benefit trust. What that is it's a set of, basically, it's a body that can appoint the majority of the board members and remove the majority of the board members. So it essentially, if you thread it through, has the power to fire me. And what we're looking at is we're introducing some elements, nowhere near all the elements, but we're introducing a little bit of the elements of like public governance, right? Where it's like, you're accountable to someone who doesn't just have stock in the company. So that's very important, and that structure is going to continue no matter what happens to the company. That's on the AI, and we encourage other companies to have similar structures. On the government side, I think we need checks and balances. There are efforts in Congress that have been announced to enact those red lines, right? So I really think that.
What's the trade if we never get a frontier model released to the public again? China. It's unbelievable. Communist China is like the leader of open source AI. It's insane to me, actually. Is it just ZPU goes up forever? It's crazy.
The legislative
privacy. I don't know if it's privacy. I mean, like privacy, always yes, but
the branch, and
it's not that direct. VVV, but VVV is like a VVV. I don't really think helps with models getting banned. The way that I understand it, it helps with to me, VVV will do 1,000% daily candle when Anthropic announces every chat log has gotten leaked and hacked. And all your KYC, they're going to require everyone to KYC. When the KYCs get leaked, VVV will do 1,000% day. But it's not going to help with bleeding edge model gets leaked or gets banned. It's not going to, you don't get like a bleeding edge model unbanned with VVV. Yeah, exactly. Aggregator plus privacy.
And the judicial branch need to exert themselves because this technology.
Also, digital ID is definitely coming. They were talking about an all-in podcast. They're going to be KYC in the fuck out of everybody.
I'm scared of companies having it, but I'm also scared of government having it. And then the companies need to provide checks on government, and the government needs to provide checks on companies. We need basic regulation of the technology. I think we need to start doing pre-release testing, required pre-release testing.
You're never. We are past the era of we're gonna get a new model on day one. It will never happen again. Every future model is gonna be Project Glasswing, and it's too dangerous. And
and auditing of the models. It's very funny to me how there's a particular group of people in the tech world in Silicon Valley who started, they started with a position of like even having transparency around this technology, even export control. This is all, just totally, it'll apocalyptically destroy our potential to create the technology. It'll kill innovation. And then as soon as they see the first real danger, which I've been expecting all along, there's all this talk of like nationalization and the government should just seize it. Come on, folks, here you're yo-yoing from like most extreme anti-regulatory, if you look at us the wrong way, you're destroying the industry, to this completely communist. The government should grab it all. We need a more sensible, moderate approach. That's the one we've been favoring all along. Because
I just can't he just gives me like weird vibe now. I don't know what to say. It's hard to like take him seriously. He is right though, but
because we've understood the power of this technology, we're not panicking, we're not denying it. We see the smooth exponential, and we're responding to it appropriately.
So how was your visit back to the White House?
We always try to work together with whoever we can in government. I said we have the simple approach. Like we have a set of principles.
He feels like he's trying to steal from me.
We follow those principles, and we hope.
This is an uncomfortable interview, by the way, in the elevator.
That folks on the other side are reasonable. And, honestly, the government has taken Mythos very seriously. Like, we've had good conversations with Secretary Bessent, with Chief of Staff Susie Wiles. I think they really understand.
By the way, I think he is right. But I'm very just thrown off by him.
The nature of the risks here. Mythos has, I think, helped them to feel much more concretely where these risks are. So, again, as with any administration, there are parts who we get along with very well.
In the lunchroom.
And who understand it. And, there are other parts that are harder to get along with. I think that's normal. That would be the case in any administration.
Yeah, so look, we don't got to watch this whole interview. That's where we're at. ZPU was an unbelievable trade if you took it. I was fucking Friday night. I don't have access to trade it. I don't have IBKR. I guess I should buy it. But event-driven trades, we're in every one. We're in every single one. We're in every one. And if I didn't double dip into everything like a fucking retard, I don't even know how much I'd be up right now. But we're doing great. So this was a big stream. This was a big stream. We have stretch tailwinds, which are terrifying for Bitcoin. We have Kevin Warsh to spend 6 weeks trying to digest and figure out what the deal is with Warsh and what's coming with Warsh. And you're very good at finding spots. I don't see you taking profit much. Yeah, we're working on it, man. I'm unbelievable ideas guy. I'm in every trade, but the selling part is it goes up and I like to buy instead of sell. So it's, we're working on it. But this is a fun stream. This is a fucking fun stream. Chat, you like the earlier time to an hour early? I think the streams are way better. They're way better an hour early. I don't know what it is, but I got like a little pep in my step again. I think they're way better. Yeah, I agree. No earlier than this, though. More energy, right? I'm like in a better mood. Can you stream longer now? You know what? On that note of can I stream longer, I would like to officially announce right here, right now, at 5:20 p.m. EST on June 17th, Wednesday, that I am on stream. I'll see you tomorrow. 2:30 p.m. EST tomorrow. I will catch you when I get to the Zoo. Have a great rest of your day. Love you, motherfuckers. Got a lot to talk about. Got a lot to get into tomorrow. Don't miss it. Don't miss it. Don't miss it. I love you. I'm out.